All right, I'm gonna show you guys something that's probably gonna blow your mind. Right here, I have a compound interest calculator. And if you invest $1,000 per month for 40 years and get an annual interest rate return of 8% per year, which I'm gonna show you how to do later, in 40 years, you'll have over $3 million just by investing $1,000 per month. So this green line here is your contributions, and this red line here is how much the total value of your investments. You can see how this grows compounding even though you're only investing $1,000 per month. That is the crazy thing about compound interest and what I'm going to teach you about today in this video. Honestly, this is something I believe everyone should be taught in school how to do, but unfortunately it's not. So it's going to be my job today to educate you guys how you can get this kind of return and really build wealth and financial freedom so you can support yourself and your family for life. And as you can see here, if we look even more closely, your total investment was about $500,000 and you get $3 million. So that's like a 6x return on investment over that 4 years. Now let's go ahead and do one more scenario here. If we want to make it a little bit shorter, how long is it going to take you to get to $1 million? Well, if we put in 27 years here in the same thing and we just calculate that. So for 27 years, you'll have over $1 million if you invest just $1,000 per month. And you can see how as time goes on, the money that you're making increases exponentially. So the longer you have the money in there, the more money you're gonna make. And this can really help you build a huge retirement fund and build you huge amount of wealth to be able to support you for life and your family. So let's jump into this video because I think this is gonna be hugely valuable. And if you don't have 10 minutes to spend time to learn how to do this, honestly, you can just go ahead and watch other videos because this is something that will truly change your life if you implement it. And that's what I'm gonna show you how to do here today. And you don't even have to do $1,000 per month right now. Even if you can just work your way up to $1,000 or more over time. My goal eventually is to get this up to $4,000 to $10,000 per month. And I mean, if we put kind of numbers like that in there, like let's see how much $10,000 per month is for 40 years. Probably something crazy. $31 million if I invest $10,000 per month. So in this video, I'm showing you the easiest and nearly guaranteed way to become a millionaire. And no, it won't be fast or flashy, but it can work for pretty much anyone. So I went ahead and made a short little training for you guys on how to invest $1,000 per month automatically and create financial freedom for yourself so you can get those kind of returns. So now let's jump into this quick training I made to show you guys how to invest $1,000 per month automatically and create financial freedom. I'm gonna cover every single step for you and everything you need to know as far as where to invest $1,000, when to, and stuff like that. So let's jump right into this. And before I do, let me just give a quick disclaimer. This video is just showing what I'm personally doing. I'm not a financial advisor, so take everything I say with a grain of salt. I'm not responsible for any mistakes or losses you incur. So please do your own thinking and research with this kind of stuff. And before we get started, there's some important things you need to know before you start investing $1,000 per month that are really important. So the first thing you wanna do before you start investing $1,000 per month is you wanna pay off high interest debt. If you have like a credit card bill and they're charging you like 16, 20% interest, you're losing money by not paying that off first. So you wanna pay that high interest debt off first. A mortgage and stuff like that, if your mortgage rate is really good, you can leave that alone. But stuff that's like higher interest, you want to get rid of that kind of stuff. Student loans, if you have ones that are high interest, or if you have ones that are low, you can maybe still pay them off slowly. This is up for you to personally decide, but definitely pay off the high interest debt like credit cards and stuff like that. The second thing you want to do is you want to save up 6 to 12 months of expenses. This is really important because if a recession comes by, you don't want to be taking this money out of your investment account. This stuff that's in your investment account, and I'm going to say this right now, only invest $1,000 per month in this kind of stuff if you're gonna leave it for at least 10, 20 plus years. If you plan on taking it out, that's probably because you didn't save up 6 to 12 months of expenses. So before you start investing $1,000 per month, you need to save up 6 to 12 months of expenses. Now you can start a little bit lower and be totally fine. So you could start with even $50 or $100 just to practice it and start putting some money in there. I would recommend that for anyone because it's just a good habit to get in, and at least you're doing something and you can build that up over time. But it's really important that you save up 6 to 12 months of expenses because what if you get in a car accident and you have to pay for your car, or something happens with your home? Like, you never know what can happen, and like a recession hits, you don't want to have to be taking this money out of your investment portfolio. So it's important to have that 6 to 12 months saved up first. And if you need it sooner, with that expenses saved up, you can use a high interest savings account such as Ally Bank, and they'll give you something like 1 to 2% return on your savings account. So it's better than getting no interest and you're not losing money. Well, you still might be losing a little bit of money from inflation, but it's better than getting no interest and just leaving it sit there completely. So if you want to have a savings account for your expenses, your 6 to 12 months of expenses, you can do that. So the final thing I want to recommend to you guys is invest 10 to 50% of your income. So if you can't do that, you probably should cut your expenses more or figure out a way you can increase your personal income. And finally, don't worry too much about timing. Because we're going to be investing on a monthly basis, you pretty much eliminate the time in the guessing game as far as when's the market going to be lowest and stuff like that. If you just do it this way, you don't have to worry about any of that because you're just investing consistently over time. So something else to keep in mind before we get into this is investing in yourself and your skills, aka education, will typically yield a higher return than anything else. That's why people go to college and stuff like that, even though, in my opinion, it's overpriced still. You can learn better ways and more effective ways. But you guys get the idea. You can't invest much money if you don't have any to begin with, right? So keep that in mind first before you start doing this. And either way, I still recommend to start investing now, even if you can only invest $50 to $100 per month, simply because it's just a good habit to get in and it will teach you so much about financial education so you can be prepared for the future. And if you want to learn high income skills, be sure to subscribe to the channel and check out my other YouTube videos and website to learn more about marketing, sales, copywriting, Facebook ads, YouTube ads, and more. So here's what we're going to be investing in today. And we're going to be doing index funds because they're going to be one of the lowest risk ways that we can get a decently high return. And we're going to personally be focusing on the S&P 500. And so if you don't know what the S&P 500 is, it's basically a combination of the 500 biggest companies in the United States. So it's low risk in the fact that you are spreading your investment across 500 different companies and the biggest companies in the United States. And if we go ahead and search S&P 500 average yearly return, that is 9.8% over the last 90 years. So I underestimated down to 8% to just give a realistic expectation of what we can expect as far as returns go. And once again, you have to keep in mind, you need to keep this in the investment for a long time to see those kinds of returns, because remember, in the short term, the market may go up and down. So you could actually lose money 6 months from now if you're not having it in a long term. You could also gain money 6 months from now. And there are a few other options that I'll cover real quickly for you guys, just so you're educated on them. I'm not gonna really cover them too much in this video, but just so you're educated on them. So as far as index funds, one of the top two ones that I would probably recommend is either a total stock market index fund or the S&P 500. And by the way, the total stock market index fund, 85% of that is the top 500 companies anyways. And as you can see here with Schwab, the S&P 500 has a barely lower fee for investing in. So that's part of the reason why I'm going for it. And also it typically has a slightly higher return on investment than the market index fund, but really it's not going to be very much of a difference because, like I said, 85% of this is made up by the 500 companies anyways. So it's not going to be too much different. Now, those are the top two index funds that I recommend, whether you go with Vanguard or Schwab, which we'll talk about in a second. There's also international funds. So in international index funds, this would be worldwide companies. That's another one you could consider. And then there's also US bonds, which would be a combination of bonds. And those are backed by the government pretty much. And those are a couple different options. There's also REITs, which is real estate investment trust. And that's another thing you can look into as well if you want to diversify more. But honestly, I would highly recommend you guys just start only with the S&P 500. And then over time, as you build up your investment portfolio, you can consider and do more research into these other things. I would highly recommend just keeping it as simple and fast paced as possible for you. The most important thing is just get started as soon as you can. So here's our top options as far as where to invest in the S&P 500. And these are the ones with the lowest fees. So Charles Schwab, and this one has one of the lowest fees currently and has a better app and website than a lot of the others. And then the second option is Vanguard, and they are the largest index fund company and also investor owned. So that's another benefit. Today, I'm just gonna be focusing on Charles Schwab just simply because it's a little bit better app and website. So it's gonna be simple for you guys to follow and has slightly lower fees, just barely lower fees than Vanguard. But really, either one of these options are great options, and either way you go will be totally cool. All right, so now let's jump into understanding investment account types. This is really valuable, guys. So let me show you guys this. This is super valuable for those of you guys that don't know. You probably heard about some of this stuff before, but you probably never been taught it. So there is a couple different types of investments accounts that you can create. So if I go here and then I go ahead to open an account, you're gonna see a bunch of options here. So there's gonna be a brokerage account, a Roth IRA, a traditional IRA, rollover IRA, all these different accounts that you can work with. So it's important that you guys understand which one is right for you to choose. And so I've kind of listed these in order. So I'm gonna explain each of these kinds of accounts to explain which one you should go with. So the first one we're gonna talk about is the Roth IRA. And with this one, you don't pay tax on profits. If you don't know already, you have to pay taxes on the profits that you make that you invest. And that's called capital gains tax. And so you can see here, it can be anywhere from 0 to 20%, but most of the time it's gonna be between 15 and 20% of the profit that you make from your investments. But with a Roth IRA, you don't pay tax on the profits. Now the downside is you can only invest up to a certain amount. So that's the downside of it. And another downside is you can't take out the profit until age 59.5, or you incur taxes plus a 10% penalty. And you can't take out you can take out the contributions, sorry. So you can do that. So what you put into it, you can take back out, and that's not a problem. But of course you don't really want to do that because once again, you'll be lowering that compound interest as it grows over time. So with the Roth IRA, the contributions that you make to it, you have already paid taxes on. So whether you got it after your wages and whatever from your job, you've already paid the taxes for your income. And so you're investing it there after tax. And to do a Roth IRA, you must be making less than $139,000 per year single, or $206,000 per year married. And you can invest up to $6,000 annually, depending on your income. So you can invest up to $6,000. This is besides the 401k, which we're going to talk about in a second. If you don't have the option to do a 401k match from your employer, this is the first thing you want to invest in. This is the first account that you want to create, because you want to invest up to $6,000, and you really want to max out your Roth IRA first, because this will give you the biggest profit because you don't have to pay tax on the profit. So you're basically getting free money by not having to pay taxes on that, and you can invest up to $6,000. So you want to max this out first if you can, because it's going to give you the highest return. Now, I personally can't do this one because I'm making over $206,000 per year married annually. So unfortunately, I can't do this one, but if I could do this one, this would be the first one that I would choose. Now, there's also a traditional IRA. And basically the main difference between a Roth IRA and a traditional IRA is a traditional IRA allows you to defer tax until you withdraw it out. So you deduct it from your income on your tax return. So Roth IRA is prepay tax, and traditional IRA is you can defer the tax. And so this one, I probably wouldn't really recommend for most people. I would highly recommend doing the Roth IRA instead. But if there's, for some reason, the only reason you'd probably choose traditional IRA is if you think your tax rate when you are 60 years old will be lower than it is currently, which most likely, hopefully, it probably won't be. I would only expect taxes to rise. So I personally wouldn't choose that, but for some reason, you can choose that if you want. Just important to understand. Now, there's also a 401k. And so a 401k is similar to an IRA, but it's run through an employer, and it can be a traditional IRA or a Roth IRA. So some 401ks may be kind of like a traditional IRA, and some 401ks may be the Roth IRA versus the prepay tax versus the post-pay tax. If you have the option with your 401k to do the Roth IRA kind of route, I would recommend that. But if you can't, that's okay. Now with a 401k, the important thing, if your employer does a match, do that up to the max amount, because you are basically getting free money. So if, let's say, for example, your employer lets you matches up to $500 per month on your 401k. You want to invest $500 per month in your 401k because your employer is going to match that $500, and your employer is basically giving you free money. So if your employer offers a 401k match, this is the first thing you want to do. So you would max this out first. If your employer is doing a match, then you would max out the Roth IRA, and then after that, you would start just investing like I'm going to show you here in a second. So if your employer doesn't have a match, I would probably just stick with the Roth IRA and do it that way, because you'll end up getting a better deal with that, because I don't really like a lot of times how the 401ks have you defer the tax payments. Okay, so hopefully that'll make sense. And by the way, guys, when you create an account for Schwab, I'm going to have a referral link in the description. I do not earn an affiliate commission for that. It literally only benefits you or the person I refer. It doesn't benefit me at all for you using it, but I figured I didn't have anyone to use it for myself. And it gives you a free $100 if you invest $1,000 or more. So yeah, I mean, it's a free $100. So, and I don't get any benefits, so I'm not promoting them for any reason for that. So I'm not biased at all in that way. I'll put that in the description below whenever you're ready to create your account. So let's go ahead and open an account. Once again, if you wanted to do a Roth IRA, you would choose that. Now your 401k is through your company, so they're obviously not gonna have a 401k plan. You do that through your company. So you probably either choose a Roth IRA or you choose a brokerage account. For me, I'm going to choose brokerage account because I can't do the Roth IRA because of my income level. All right, so basically from there, you choose individual or joint, depending on if you want to have the account with your wife or somebody else. Most people probably just do individual. And then from there, you need to have this information, and you're going to be able to finish your application in about 10 minutes. I'm going to walk you guys through this actually. And by the way, guys, to figure all this stuff out for you, this literally took me hours of research and figuring this out. So I really hope you guys appreciate this video. And if you do, make sure you leave a like. Let me show you guys the step-by-step, because you're going to be pretty much working alongside me I invested $1,000 myself literally just today. So if you want to follow my investments, you can literally follow this step by step. Let's jump right into it. So first thing you do, you open the account. So you choose the brokerage account is what I did. Now, if you want to do the Roth IRA one, you can do that. Now you're obviously going to fill out this information about yourself. Pretty straightforward. Fill out a login info, your home address. So there's some important options that I need to show you here that you're gonna maybe be confused about. So you can do a margin account. I would recommend doing paperless, save the environment. Let's go. So I just selected yes on a margin account. You can do no thanks if you don't want to worry about it. But really, you're probably not gonna use it, but you might as well just say yes. But just make sure if you say yes that you don't accidentally use it without knowing. So don't mess it up. But I don't think you can mess that up unless you're really, I don't know, something's wrong with you in the head or something. All right, so do you plan on actively trading stocks, ETF, and options or the futures? I would put yes on that. Options trading, you can put yes on this if you want to. I just put no because I'm probably not going to do it. Options are a high level of risk, obviously, as you can see. I don't even plan to do it. And even if I do want to do it later, I can probably change my account and ask for it later. So it's not a big deal. And then checks and debit cards, I said no thanks on that. Regulatory questions, you just have to answer these correctly. So you want to set up, when you do this, you want to set up an online bank transfer so you can deposit $1,000 per month automatically into your investments and invest automatically. So you set the system up and it's going to automatically invest $1,000 per month for you. It's just going to take it straight out of your bank account and invest it for you every single month automatically. And that's what makes this super powerful and pretty much the only real true form of passive income, because once you set this up, you are literally doing nothing and you are making money. Pretty cool. So as you can see here, I put in the $1,000 for my bank account and it took 3 days for them to approve my account and for the money to go through. So once you do this, you have to wait 3 days. So congrats, at this point, your account is now created and funded. Now it's time to start investing and set up automatic investments. Let's jump into that part. So here's how to set automatic investments and how to make your first investment in the S&P 500. So the first thing you're gonna do when you log into your account, you're gonna see your value of your cash in here, and you go to trade and you wanna select trade mutual funds from the drop down. And so you're gonna get to a page like this and you can see I have $1,000 available to trade, and SWPPX is the Charles Schwab S&P 500 index fund. That's the one that you wanna do. And so, or you can choose whatever one you wanna do. You can do your own research, but if you just wanna do it the quickest way, honestly, the investment level return is not going to be very different between this one and the total market, but you can think about it a little if you want, but honestly, I just go with this. And I'm showing you exactly what I actually invested in myself so you can know I'm personally doing this as well. So if you want to do the buy action. Okay, so at this point, you're gonna see $1,000. You're gonna review your order, but there's something really important here, and it's gonna say reinvest, and you need to select one of these boxes. The one that I personally selected was dividends and capital gains. So what dividends are is some stocks will give you money each year or each quarter or whatever specified period of time. And for example, with the S&P 500 SWPPX, they give about a 1.9% per year. So their stocks, each of their S&P 500 index funds is $50 per share. So you get about $1 per share that you buy. So from investing $1,000 per month, I'm pretty much just gonna get about $20 for free every year as a profit payout, which is also known as kind of a dividend. You can look up dividends a little bit more. It's kind of outside the scope of this video to explain it more than this. And then capital gains is obviously the profit that you make from your investment. So you definitely want to have capital gains at least, because then you're not really getting the compound interest as much. But I would recommend just doing the dividends and the capital gains, because really, like, what are you going to do? You're going to have an extra, you're going to take out $100 from your investment per year. Like, that would help you feel good about your investments, that they're giving you like a free $100 every year or whatever. Cool, you can do that, but it's up to you. So there you go. Order received, did $1,000. And by the way, we haven't set up the automatic part yet first. So in order to set up the automatic, we first have to just do a single order, and then we can set up the automatic after. So now we've set up the single order. We've bought $1,000 in shares of the S&P 500. Now we're gonna go to mutual funds and choose automatic investing. And now from there, you're gonna click the enroll now button and under the one that you just chose. So any index funds or mutual funds you invest in are going to show up here, and then you would want to enroll in the automatic investing status. And so click enroll now, and then from there you choose the investment amount you want per month. The minimum is $100, so I guess you can't actually do $50. So minimum is $100 actually, sorry about that. Investment frequency monthly on the 20th. So that's still pretty reasonable. And so investment frequency, you want to put monthly, obviously you can put monthly on the 5th or the 20th or whatever option there was. And then just make sure your start date is 1 month from now, that it's not going to do it in a few days, unless you want it to, of course. But just make sure your start day is the day that that's going to be the next time your $1,000 comes out. All right, so there we go. We confirm it, and then we confirm it one more time, and boom, our automatic investment of $1,000 per month is set up. And now if we go back to the accounts tab in the main dashboard, you can be able to come back in here whenever you want. They also have an app too. You can see how your investment is growing over time. Now, once again, don't get caught up in what it's doing on a daily basis. Like, I probably wouldn't even recommend checking this very often, but if you want to, you can. But know that you're just waiting over the long term. Like, this is not a game where you're looking at this every day and then you're seeing if it grew or not. That's just going to put you in a bad mindset. You could probably look at this once every 6 months or once every year. But besides that, I wouldn't do it more than that. The key, once again, we're leaving it for a long period of time. It's going to fluctuate up and down, but over the long term is how it's going to grow. And boom, that's the video. So if you guys found this video to be valuable, please support the channel and help me out by leaving a like. I spent a lot of time on this video. If you want to build financial independence and retire early, be sure to subscribe to the channel to stay up to date with the latest and most effective topics. And next week, or one of the few weeks after this, I'm going to be sharing my personal income expenses and expenses soon. It's super cool. You'll be able to see what percentage of my income is spent on my house, how much is spent on my investments, how much is spent on my business, how much I spend on eating out per month. So if you want to see that video, subscribe to the channel. Thank you guys so much for watching, and I look forward to seeing you in the next one.